Did you know that you could lose thousands in capital gains tax when selling your only home in the UK, even if you think you are safe? Today, I'll be showing you how to keep 100% of your sale of your only home from capital gains tax legally. So please stay with me till the end, because if you skip any part, you will lose a big chunk of information. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. Let's get started. So you pay capital gains tax on a disposal of a chargeable asset. In property terms, you pay capital gains tax on the sale of your second home or an investment property. However, there are circumstances whereby capital gains tax becomes chargeable on the sale of your main residence. And these circumstances are if you rent part or all of your main residence, or if you rent part or all of your main residence for business purposes. And we're going to explore this later on in this video, so stay with me. When do you not pay any capital gains tax if you sell your main residence? So you don't pay capital gains tax on the sale of your main residence if you have lived in that property throughout the duration of the ownership period. When you sell such property, there will be no capital gains tax implications. This is because there is a relief called Principal Private Residence Relief. This allows the entire ownership period to be exempted from capital gains tax as long as you live in your main residence and your only home throughout the duration of the ownership period. So there are some situations whereby you will be absent from the property, but you will still qualify for this Principal Private Residence Relief. And these situations are outlined as follows. The first one is if you are absent from your property for a period up to 3 years, as long as you return to live in the property as your main residence before you sell this property, the entire 3 years will qualify for a full Principal Private Residence Relief. And so that period is covered. And so when you sell the property, you will not have any capital gains tax implications. The next one is any period you are absent from your property and you move overseas because of employment. There are complex rules around this, and so this is where you need to speak to a professional who can break this down for you to ensure you benefit for the entire period and that Principal Private Residence Relief. We are here to help, and so if you need our help, please contact us using the details in the description area or speak to your tax advisor. The next one is if you are absent from your property for a period up to 4 years for employment elsewhere in the UK, whether you are an employee or whether you are self-employed. Again, this also contains complex tax rules, and so it's important to speak to a professional to help you maintain your Principal Private Residence Relief. We're here to help. So these are called deemed occupation. So situations whereby you are absent from the property, but because you meet certain criteria, you will still qualify for what is called Principal Private Residence Relief. These are what I have already discussed previously. Now let's consider situations whereby capital gains tax may apply on the sale of your only main residence. The first one is if you let part of your home to someone else whilst you occupy the remaining. You will not get the Principal Private Residence Relief for the part that is let out, but rather you will get what is called letting relief. And because you are only getting letting relief, and not principal private residence relief. When you sell the property, any net gain arising from the sale may attract capital gains tax as long as it's over the annual exemption amount. Please note that this doesn't apply when you live with a family member. You share the house, you share food, you share everything with. This doesn't apply. You will still get your full principal private residence relief when you sell such property. Another situation whereby your main residence sale may attract capital gains tax is when you let your whole property to another person and you make another property your main residence. For the entire period that you have been absent from the property because you've rented it out and you have made another property your main residence, that period will not qualify for principal private residence relief. And that period will also not qualify for letting relief because you are not living in the property with this person. And so you only get principal private residence relief for the entire period you lived there as your main residence and the last 9 months of ownership period. The remaining will attract capital gains tax. Another situation whereby you may pay capital gains tax on the sale of your main residence is when you allocate a room or part of your house exclusively and wholly for business and commercial purposes. When this happens, that part that you have allocated exclusively and wholly for business purposes will not be covered by principal private residence relief. And so when you sell it, any net gain will attract capital gains tax. And so with all these in mind, what do you think you should be doing if you don't want to pay any capital gains tax? It's time to seek professional advice to steer you the right direction to avoid any capital gains tax. So you can see how complex capital gains tax, even around the sale of your only main residence, can be. And so we have prepared this video for you to watch next. It contains capital gains tax exemptions that you can use to save yourself capital gains tax. I hope you have found this video useful. Please don't forget to subscribe to our channel and don't forget to turn on the notification bell so that anytime we upload a video, you'll be the first to be notified. Thank you for watching.